Hello, Maverick traders. Welcome out to your currency midweek for August 24th. Corey here with you. As always, a quick reminder to make sure that you follow your trading plan, and let's get to it. So, a little bit of I'm going to call it a boring time in the FX markets, and these things kind of come and go. Sometimes there's a lot of opportunity. Sometimes there's things that we can be really excited about. And then other times, we're waiting for the next good pitch to swing at. Right now, we're in the waiting game, I feel like. So stocks are likely to struggle for a while. I mentioned this last week that I expected that the peak was very close at hand. We talked about how the market was still in a bear market, still below its 50-week moving average, right? We touched on that, and sure enough, we started to peak. We started to sell off in equities. So maybe that kind of translates to an extended period of risk off in FX. Maybe things, kind of get a little dicey here. The problem, as I see it, in kind of creating that correlation is I don't know that stocks slide in dramatic fashion. Sure, there's going to be some strong down days, but I think it'll be choppily moving lower. I do think that we're in a bear market still, that we will trade lower overall, but it might be a very choppy environment here for the near future. Inflation data, we've talked about this, it's peaked, but the problem is that quantitative tightening continues, that the Fed has to fight inflation, that even if it's going down to 6 and 5%, well, that's still way too high. So they're going to be in battle mode for a while here. US dollar remains strong. Euro USD is broken parity. I was trading the US dollar quite a bit recently, in the recent past, last couple of months, but I did not, Euro USD actually had a perfect bearish Bollinger Band set up on the daily chart and so on, but I really didn't foresee that the dollar would go back to those highs and maybe even go through those highs. I thought it was going to remain a little bit more choppy, so I just haven't traded it recently, and that was a little bit of a missed opportunity, specifically against the euro. That was a dollar rally that I didn't really participate in after trading the dollar quite a bit prior to that. And that's the thing, is if something is moving a little different than the picture that you've painted, you just tend to not trade it, right? What newer traders do is they dig in their heels. They're like, well, I thought it should stay lower than that, so I'll bet even more aggressively against it because now now it's going to put prices it shouldn't be or something. And actually, you'll go the other route over time. You'll learn that you're going to have strong opinions about things and other things a lesser opinion. And you want the market to confirm what your expectations are. And if it does, you ramp up the aggressiveness. If it does not, rule number one is risk management is the most important thing you can do as a trader. And if you dig in your heels and you keep doubling down and trying to bet more and more against this thing that's killing you, it will destroy you. It will cause you to have bad returns, and it will just make a mess of things. So just don't do it, right? Sometimes we're going to be wrong. We move on and we find things that we're right about, and if we want to be aggressive, we get aggressive with those. So crypto markets and just FX markets in general are pretty choppy right now. So I don't know, we'll take group requests in terms of things that you want to look at a little bit later on, and maybe there are some areas that some of you feel a higher level of conviction on. I always try to really identify at least one thing that I can really hone in on, that I feel strongly about. And every once in a while, there's just nothing, and that's kind of how last week into this week has been. I've talked about, I felt good about different opportunities and setups and currencies for a while there, which was kind of surprising because usually the summer months are quiet and choppy and sideways. But this summer's been okay. It's been decent, I would call it, in terms of historical comparisons. Now we're getting a little bit of a lull. Most commodities have rolled over, with the exception of energy prices. Really, that's the lone holdout. Now, as we look at the economic reports, Pending home sales a little bit better than expected. I don't know if we can get too excited about a negative number, but they were expecting negative 2.6, so negative 1% sounds a heck of a lot better. PMI data really came in ugly this week. In the US, we got a services PMI at 44. Anything sub 50 is like a recessionary number. Germany at 48 on their services PMI. There were some other numbers in the UK. They had a sub 40, sub 50, pardon me, number. So we're battling with recessionary type of aspects here in the US and most certainly in Europe. They are, I would argue, already in a recession. I think the data suggests that. U.S. durable goods, a disappointment at no growth whatsoever, completely flat number with close to 1% expected. So not a great week for data so far. As we look at economic reports and kind of how that correlates with asset prices, well, equity markets are down, down 1% to 2%, both in the U.S. and internationally. Crypto bouncing back a bit. Bitcoin Cash is the big outperformer there, and oil bouncing back. I've liked energy as a play. We've talked about that on a number of occasions. I've mentioned, I really think in terms of commodities, energy is the one that can kind of hold up better than the rest. And I continue to kind of trade and expect that to be the case. So as you look at this chart of the S&P, I'm going to reiterate what we said last week, which is, yes, you're in a short-term uptrend. That's not debatable, right? We're going up. But the question is, and here's where we were last week, and I posed the question of, do we go higher? We don't have it on this chart, but the 200-day moving average is like this. And do we go higher or do we fail? And my argument was, well, this is where we fail. We are very, very close to a peak. Now, that was pretty darn accurate because we basically peaked from that point and went down this past week. Another reason, is the 50-week moving average. If you look at the 50-week moving average, it's kind of your dividing line between when you're in a bull market or a bear market. It kind of, if you want to use the 200-day, okay, great. In terms of the 200-day moving average, it would work similarly. But basically, when you're above the 50-week moving average, you've moved into a bull market. And that happened over here in late May of 2020. This was COVID, right? COVID put us into a bear market. We came rebounding out of that. And from May of 2020 all the way up until early this year, we were in a bull market for a couple of years there, right? That's a bull market. Well, things changed earlier this year. We went into a bear market below the 50-week moving average, and even with this recent rally, we are still in a bear market. We're still below that, and my expectation was and is that that would be kind of where this rally would top out and that we would come back down and move in a choppy manner. But I suspect, the more I look at this market, I think we're going back towards those lows and possibly below those lows. Not a super optimistic point of view. I realize that doesn't, build a warm, fuzzy feeling in any of us because we all root for a good economy. We all root for a stronger market, but I don't think that's what we're going to get. That's my take. That's my opinion. I suspect that we're headed back down there lower. So in terms of equities, bearish. In terms of currencies, well, a little bit of a mixed picture sometimes in currency land, but one would think that that type of bearish price action would be, worse for commodity currencies. Maybe the Aussie would trade worse in that environment in coming months. Maybe the Kiwi would. A little bit better for the US dollar, for the Japanese yen, maybe the Swiss franc as kind of defensive currencies. That would be the general kind of takeaway there. So let's look at a few other things here. My thing is frozen. Oh, there we go. So as we look at crypto, or pardon me, FX first, you can see weakness in the euro and the Swiss franc this week, a little bit stronger in those commodity currencies. Lackluster, there's not a lot going on there, but that's the mode so far. Most of crypto is quiet and sideways this week. It's a little more bullish than anything, but sideways. Bitcoin Cash being the best of the bunch, up 10.9%. But Bitcoin itself flat, Ethereum up a bit at 3%. Let's go in and look at a few other things here together. So, market wise, in the short term, you can't really say we have a short term downward trend yet. We don't, right? We've rolled over, but we're not making lower highs and lower lows and so forth. But we are below the 20, we're above the 50, and it's just a mixed picture. My take is that as we rally, we'll set a lower high, we'll make a lower low, and we'll kind of see what happens from there. If you look at international markets, not a whole lot different. I mean, we've rallied up towards that prior level. Is it possible that this is setting up for a big cup and handle and so forth? Interestingly enough, I do like international stocks and the setup for them better than US. So if you are bullish on something, I think playing international equities, playing the world stock index to the upside makes more sense to me than the US based. Could be a cup and handle. Unfortunately, I kind of think it's just a trading range that's going to kind of fade off here, would be the general take. As you look at crypto here, still in this choppy mode. Last week was pretty rough. Big sell-off that put us down here, and now we're bouncing back a little bit. Do we climb from here? Is this just a sideways range? Well, if we kind of drag this over, it better hold at these levels. If it doesn't, and I fear it won't, you're in a little, inverse cup and handle type of dynamic. And that would be my expectation. I think it's just a tough environment for crypto in general. Crypto markets tend to be risk correlated, meaning as stock markets go, so does crypto. When people have a lot of capital, when they're willing to take more risks, et cetera, that's when they pour money into stocks. And this is when crypto is doing its best. In this environment, it's the opposite of that, right? It's kind of been money's coming out of the system. Interest rates are going higher. Stock market has been struggling year to date. Crypto has been annihilated. It's not going to do well typically in a risk-off environment. So I fear that the setup is bearish, that the trade will be bearish there for crypto. So I would be looking at this as a short. I would be looking at this as a downside trade in the crypto space. Kind of pick your choice there. Look for the currencies that are maybe the weakest and kind of go from there in terms of expecting some further downside expectations. Now, the rest of this week, so preliminary GDP comes out tomorrow. Expectations are for a negative number. Remember, we're seeing negative GDP numbers, which in the purest sense is what recessions are all about, right? You're going backwards, you're not growing, etc. That can be a little bit of a market mover. And then also, maybe more importantly, the Jackson Hole Symposium begins. Fed Chair Powell will speak on Friday, but things can come out of the Jackson Hole. If you go back a few Fed chairmen ago, this might have been 2012. I don't remember the year exactly, but Ben Bernanke was the Fed chairman at the time. And I remember, and I've told this story before, but it's one of those reminders of that, these Fed chair members and even the head can really change things without notice. And Bernanke, so for a long time, they had as their guidance that once unemployment went down to 6%, they would stop quantitative easing. They would stop their bond buying program and so on. And that was the time where the unemployment rate hit below 6%. It was like 5.9 or whatever. So everybody said, okay, the Fed has told us that at that level, they will stop bond buying programs, stop printing money, stop with quantitative easing. And Fed Chair Bernanke came out and said, well, that was our guidance previously, but that's outdated guidance. That's an outdated target. We're going to continue with these programs. And basically, we're not ready to stop printing money. We're going to keep going. I know we told you at this level, but that's just, old news or whatever. And the markets screamed higher, as would be expected, because basically they were going to pour more money into the system, easy money policies. And it was quite a shift. And it was a pretty big turning point for asset prices generally, and it probably set in motion, unfortunately, some potential problems, right? Bubbles and things form from too much risk and too much money in the system, and there's just people just kind of lose their minds and start paying any old price for any old thing. And not to rip on a certain sector or something specifically, but when you look at NFTs and these things that came about, and people paying millions and millions of dollars for essentially a screenshot of of different things. It's like the first Twitter, the first tweet that ever went out. Somebody bought that NFT and paid millions and millions of dollars for it, and it's essentially a picture of a tweet, and somebody's going to pay millions. I mean, people just lost their minds, and the risk taking was ridiculous. And that's what happens with too much easy money. And now we've got inflation and so on. So anyway, I'm not expecting anything too shocking, but expect some volatility out of that. Just hard to predict exactly what it will be. My guess is there's a better chance that it will be bad than good, given the fact that, well, frankly, if you just kind of look at it from the standpoint of what the Fed has to do now, the Fed's kind of in a corner. Now, it's of their own making, but they're in a tough spot, and they've got to fight inflation, and they're not going to ease off of that for now, in my opinion. And if you see it that way, and your expectations are the same that way, well, that creates some issues for the markets, right? That creates some dynamics where essentially the Fed's got to continue to strike a hawkish tone and say we're not done fighting inflation yet. Let's go look at some currencies together. And if anyone has any ideas, fire away. We'll just kind of go through the list and look at the charts and kind of make sense of this together. If I start with US dollar, what do you see here? Well, we obviously have resistance up here. We've established some support down here below, somewhat of a trading range. What could this develop as? Well, this could be a sort of cup that becomes a handle in the breakout. I mean, it could be a variety of different things. It could just be a trading range. But any way you slice it, this chart is not bearish. It's neutral. It's quite possibly bullish, but it's not real bearish right now. I mean, heck, we just pushed above prior pivot highs. So did I expect this much strength in the US dollar? I did not personally, but it's happening. And so you adjust, right? I had a pretty good, man, for a while there, I felt like I just had the tone of the US dollar and just really was in sync with it. Right now, I'm not super excited about doing too much with USD. All right, let's look at the Japanese yen. Bottomed out back here. Well, now it's just, I mean, this is just a mess. Where it should have, would have, could have is right in here. This is where it should have taken that next step higher. And this kind of correlates with where the US dollar deviated and so on. I mean, the dollar's been super strong. The yen has just gone quiet. and sideways, and it's just not really outperforming or underperforming or whatever. It's just a mess, right? So I don't know. I don't know what we do with that chart either. If we come into the Swiss franc here, let's remove these drawings and kind of restart. So what do you see? Well, we clearly had a key level of resistance and a false breakout, as I see it. I mean, you broke above and closed and finished above that resistance zone, and then what happened? You reverse back down. So I talk about this from time to time. The more I trade false moves and false breakouts and look for these false moves and then trade the other side of it. So in my mind, this is bearish for the Swiss franc. Now, could it recover back? It could, but from false moves come fast moves oftentimes. And so this thing might develop quite swiftly in that direction. This is what we would call a bull trap. A bullish trap is basically whoever got sucked into buying here is now trapped in that, and it might inflict some pain on them. And that's in essence what false moves are, is a trap, and then that, you know, the people that got sucked in, all of a sudden it starts to reverse that way. So the euro tends to have some, you know, correlation to the Swiss franc. Well, it doesn't anymore. It hasn't for some time. The euro's been on a deep, deep downward phase versus virtually everything else. This speaks to a specific issue in the European region. Those that share the euro, they've got an energy crisis on their hands. If you've been looking at what natural gas prices have been doing in that space, it's pretty ugly and pretty dramatic. So I mean, it's weird, very strange to see the Swiss franc as strong as it's been and the euro as weak as it's been. Those tend to be much, much more correlated, and they have completely deviated from that. The euro's been a walking disaster. Here's my thought, and this is only a thought at this point, but if they're basically inversely correlated, perhaps if the Swiss franc had a false move up, perhaps this is kind of a false move down, and maybe the euro comes bouncing back sharply for a few days. I need to see a little bit more pivot and a little bit more confirmation, but I don't hate that as an idea, and I don't usually, you know, this is certainly a bearish chart. I can't really strongly advocate for a euro upside because boy does that go against the trend. But if we come into a little bit shorter time frames, you could start to make a little bit more argument where you say, okay, well, it's not there yet, but if we were to reverse this trend and if we were to start to climb upward and so on and so forth. And so, I mean, the only one that really is even above some moving averages so far is the 1 hour chart. And it's run into a bit of resistance there. So, you know, I don't know that that's anything I'm going to trade specifically, but it makes me wonder. I'd rather trade the Swiss franc, though. That kind of false move. All right, the British pound. How in the world do you trade that thing effectively? I mean, that is choppy, choppy, choppy. You get a little fade, and then it bounces back, and then back down. I mean, above the moving averages, below the moving averages, above, below, and who knows. But I suspect we will come out of this kind of symmetrical triangle at some point, and that might be your opportunity. But you notice there's just a lot of choppiness in a lot of these charts. CAD I've liked. This comes along with my energy theme, and the energy theme is basically one where I expect oil and nat gas and those things to hold up relatively well. Well, that should be beneficial to the Canadian dollar. You know, we're trying to break out to new highs here versus other currencies and starting to reverse a bit off of that today. We'll see. We'll kind of see how CAD trades here in the near term. Right now, it is vulnerable to a false breakdown. I don't know that, I think it'll hang in there a little bit better. The Swiss franc has a little bit more confirmed. Right now, I would give CAD still the benefit of the doubt in terms of working its way higher. Aussie, it's just been sideways for the past few weeks. That's tough to trade back and forth and back and forth. Remember, this is a daily chart. Whoops, I'm not on a daily chart, screwing up there. But the same thing, same idea, same concept there, where basically that's your range, that's your consolidation, and that's tough to trade. And then Kiwi, same thing. That tough to trade. I mean, it looked like it was going to emerge here and then kind of a false move, and now back into that trading range. I don't know. That's a tough one. I don't know what we make of that. As you come back, I was looking at CAD on the wrong time frame, but same thing, kind of a bullish bullish chart, more bullish than most everything else, maybe an ascending triangle and such. But ultimately, I would give CAD the benefit of the doubt. I think it's a better currency than most. All right, let's take a look here. What about Aussie Swiss franc long on the daily chart? So let's take a look at it together. Aussie Swiss franc. Come into my pairs here and see where I can find it. There it is. So here's Aussie Swiss franc, and let's remove some drawing. So it's trying. I mean, here's your short-term moving averages, and we've kind of just moved above them. If you look at that 50 period moving average, we're just above it for the first time in months, really. You have to go back to this period as the last time you were above it. So it's trying to do that. I mean, it's a possibility. If you wanted to buy something against the Swiss franc, Aussie is better than Kiwi, stronger. You might go CAD. I mean, you might go CAD versus the Swiss franc as something that could be a little bit better, a little bit stronger potentially, but I guess that's, kind of moving above the 50, but maybe not super convincing just yet either. But it's a possibility for sure. I don't mind kind of finding something to buy against the Swiss franc. The obvious choice, if you're just going pure technicals and just saying, well, let's just buy whatever's going up, well, it's the US dollar. The US dollar's been the strongest one lately. It also back above its 50 versus the Swiss franc. And remember, the Swiss franc has been really strong. We're talking about it's a false breakout to new highs. So most things are not even going to be this good. To be above the 50 kind of speaks to the fact that the US dollar's been quite strong. So I think it's worth a look. I mean, if you find on a shorter time frame that you get a setup in Aussie Swiss franc, I'm not against that as a trade idea. I don't mind that at all. Yeah, we had a request for crypto, so let's take a look at a couple of those. I mean, if we just look at crypto in general, my thought is that we may be trading back down here for the foreseeable future. So if we come into a little bit shorter time frames, you can see the setups here. See how we broke down, and now we're kind of in that kiss goodbye phase, right? The break, and now we're coming up. If you were to use like Fibonacci retracements or whatever, if you were to measure the size of this rally back is probably right in that Fibonacci zone. That's probably a 38 to 50% ish type of retracement. This is where it should kind of fail and roll over. Now that's Bitcoin, Ethereum, that's the combo. But if we look at them individually, Bitcoin by itself, bearish, right? Ethereum by itself, better than most of the other crypto. I will say that, but Ethereum still bearish, still the rollover. Bitcoin Cash, a little bit better than most, but still in that bearish phase. Solana, worse than most. Cardano, worse than most, you know. So you definitely have those rollovers, those bearish patterns where I think crypto certainly could be bet against in the here and now and in the near future for the coming days and weeks ahead. I think that's kind of the expectation that I personally would have. So good stuff. Kiwi US dollar. Let's break it down. So Kiwi USD, let's come down here. And I guess I don't need to find it. We could just plug it in, but there it is. So let's start out and kind of work our way in. So if we look at, here's the daily chart. Well, that's a mixed, ugly picture, but let's work our way in. 12-hour, kind of a breakdown and still bearish. 4-hour, still bearish. I mean, I think if you're looking at this on the short side, that's the more obvious trade. Descending triangles on the 4-hour time frame. The 1-hour chart, you know, bearish. Same, of course, it's the same pattern. It's just spread out a little bit more because now it's a 1-hour versus a 4-hour. But you can see that consolidation that we've been in down near the lows. And you always have to think about what a chart pattern is. It has a wrapping around it, right? It has an emotional type of aspect to it. And if you think about something that's come down a lot and then it's only strong enough, I mean, it's so weak that the best it can do is go sideways at its lows, can't even really muster any real bounce, any real momentum, kind of speaks to how weak it is. And anyone that was playing this and hopeful for a bounce, I mean, how disappointing is this, you know? So expectations are, you know, I would tend to agree with you that this is probably going to trade to new lows here in the near future. So in terms of the markets and expectations, I would start to anticipate lower lows coming. That would be the technical look there for sure. So I agree with you. So, you know, that's some ideas there in terms of different currencies and things that are moving around. So, in conclusion, as always, just make sure that any trade you take, you got good position sizing. Remember, if you're going to add aggressiveness, do it in the things that essentially you're seeing profit, that they're playing out the way you anticipated, that you're getting confirmation that you're in the right trades. On Thursday, we're going to send out a video on time frame and volatility. We'll have our recap recording, and then as always, we'll get out the trading room over this weekend. Hope you've enjoyed this week's midweek. Have a great rest of your day and week ahead, and we will see you next time. Goodbye, everyone.